Good morning, good evening, wherever you are in the world. Very happy to be here again with James Check from Check on Chain. James, I think this would be good. Do this once a quarter, something like that. Last time we
Yep.
chatted, we were on the cusp of changing the 4-year cycle or going down, and it seems that we went down. So, lots to talk about. Very curious your thoughts. How you doing in general?
I'm good, mate. No, I've never been busier. My phone's been lit up like a Christmas tree for some time now, which is good, right? Volatility is good. It keeps things interesting. And I was talking with Alec, my business partner today, and he just said like we did a live stream earlier in the day, and he goes, "It's amazing how the market goes somewhere else, and like the data that I mean, I think it's a pleasure I get to look at. It's just always fresh. There's always like a new story about like what people are doing, and that's what makes my job fun. I get to just like explore what Bitcoiners are doing, knowing that they change, knowing that I've changed. My first Bitcoin buy, I was a very different person to who I am now, and it's like that story, that immutable database. We're gonna look back on this thing as like a story of people, not just a network. And I love it. I think it's fascinating.
Yeah, could not agree more. It's a living, breathing thing. This whole Bitcoin thing, and it's really, really interesting to see. It's a good point to see how looking back to earlier cycles. I think very often now about. I mean, some people may say it's kind of sort of on the surface, but I think very often to life events around what was the Bitcoin market doing at that time,
Oh
and
yeah, yeah, totally. And that's actually in all of my charts. I've been going through like every single one, piece by piece. So by the way, just for folks who use my charting website, I know stuff is breaking left, right, and center. I've had to separate legacy and the we're getting ready for the full upgrade. So I'm actually going through every single chart. You won't see the upgrades for a little while now. It's like an old beat up car that's just
are
still running. The wheels are clanking, but it works.
are you
But
refactoring with Claude Code?
parts of it. So I'm
Yeah.
using Opus to take it from that looks like it was written by a civil engineer to that looks like it was written maybe by a developer. So I'm slowly going through that process. But in part of that journey, I'm like learning all the old. So some of the charts I'm going through at the moment are the ones I wrote like back in 2019. Some of these have been
Mm.
around for a long time, and I can see my old code. I can see my new code. But what I'm looking at the moment is like the price. It's in every chart, but really it's a calendar. It's actually not even really part of the story, but it's consistent in every chart because it shows you where you are. It's the storyline. It's like so you can visually say, there's a thing that's going on. Yes, people map it to the price, but for me, that's my calendar. I know the event that caused that thing, whatever it is I'm looking at.
Yep, I love it. Well, look, let's dig into it. Where do you want to start? Let's just I want you to drive this one today. So,
Yeah, actually, where I want to start is let me share my screen. I want to start with mean reversion and hang on, no, let me get rid of that. You can see my beat up website.
looks great.
Awesome. I was informed. I don't know where my logo is gone. I don't know why my logo is busted, but it is. That's where we're at. And it's literally where we're at. I'm like, I'd love to fix it, but I actually just have more important stuff to do.
I
to do
completely
right now.
understand. I mean, for those
Yeah,
that are
it's
listening that
running
are
on this
trying to
laptop over here. I'm like, I just can't get over there and pick it up. I want to actually start with. Hang on, I'm just trying to find in my code base this one here. So this is something I've been playing around with. It's this idea Kager, right? So I've always had an issue with people using like 4-year Kagers. Why? Because it's literally measuring, like if you take the 4-year Kager from April 2021, it's measuring to April 2024. And you often get this weird thing where you're picking the exact top to like the worst part of a dip. So like the Kager on price can look terrible. You know what I mean? So that's what the yellow trace is here. The Kager on price can look terrible, right? Shocking. It's going down. Oh no, Bitcoin's got a Kager of 6.2%. But my rationale was, is that really the right way to measure this stuff? Shouldn't we be measuring against something that's slower moving, much bigger? So as an example, let's bring in the 200-week moving average. The 200-week moving average is a big floor price. Bitcoin comes back to it in the bears. So this is kind of the Kager of the bear market floor. It's also going to be a lot slower. It's going to take a lot longer to move. It's a slower moving beast. Kager of 55%. Now, there's all sorts of on-chain models we can bring in, true market mean, realized price, 35, 34. But you can see that by taking out the volatility of price, and I'm using a 5-year for this, just because it gets rid of the 4-year base effects, I would call them. You're not measuring peak to peak, trough to trough, and it doesn't get this volatility. And then I've got your the Porkopolis power law, which again I put in there as a bit of a credit. But this is obviously
Appreciate
the
it.
only one, and different models, right? So we don't know what the cost basis of investors will be in the future. We don't know what the price will be in the future, but we do know what the power law is going to look like. So it gives us this interesting guide as to where everything is going. So I'll just throw that out there and see what your thoughts are. But this was a different approach I took to being like, what is CAGR? I hate this idea of the volatility and everyone getting hopped up about it because it's just noise. Pick some slower moving, but arguably more important and meaningful things like capital flows, like the 200 week. Where's the bear market floor?
Yeah. No, I mean, not much to add. The thing about the power law itself, which is nice, is it captures sort of uh, the more volatile growth in the early years. And, obviously, for people that don't know what we're talking about or haven't studied it, basically the power law is a different way to measure growth compared to, say, exponential growth, which most markets grow in. And it does, like you said, it provides a nice overall guide. Lines up kind of better with, say, the 200-week moving average or the longer moving averages. And of course, there are times where you're going to be over it, you're going to be under it. But the nature of the power law is basically faster growth at the beginning. As the network matures, then you have more stabilized sort of the growth. The growth itself diminishes, and
Yes.
and yeah, it's just one way to look at it. But yeah, all of them are good. It depends on your goal, right? If you're a hodler, it might just help for general peace of mind. If you want to trade and go really short term, then obviously there's different charts for you.
And
But I
that's
think,
the thing, right? It's all about
yeah,
time frames. What's your time frame that you're thinking about this stuff, right? People can get caught up in the short term, and that's often where a lot of people disagree in markets. And it's natural human tendency. We take all the stuff that Michael Saylor says or Jeff Booth says, like long range, multi-decade theses, and we go, why isn't it playing out in the next daily price candle? And at the exact same frame, we basically take like the next daily red candle and go, oh man, it's going down forever. You extrapolate small stuff forward and you extrapolate really big stuff into the short term. It's very human nature for us to do that.
completely agree. Completely agree. And yeah, so we'll see where it goes. But so what was your conclusion after layering in
Well,
some of these different?
I realize I've busted something. I'm trying to find, actually, hang on, maybe it's this one. Oh, yes, it is this one. This was my summary process of going through this. So if we actually bring in the mean median for all this stuff, like what is the CAGR for Bitcoin? You can see price, which is the gray bar here, is by far the most volatile, right? Swings up, down, has horrible years, has really good years, beats all the other models. Those are the different dynamics. But over the long arc of time, right, since 2022, 38, this is the mean and the median of all of these different models, 40%, 50 something, 60 something, 50 something, 40 something. So we're in that kind of ballpark. And one other thing that I found that I thought was very, very interesting. Let me plot out, hang on, this one here. So are you aware of the true market mean?
No.
So let me explain the true market mean. Let me pull up this one here and go this guy. So the true market mean is actually one of my, I think it's the biggest innovation that we pulled out of. If you're interested, Coin Time Economics, this was Dave Puel and I, we spent the best part of 18 months building up this study to try and understand the realized price is a fairly commonly used tool, which is the purple line down the bottom here. Let me just zoom out a little bit.
Everybody should be checking on chain. If you don't know, I'm sure everybody knows watching this, but
so the realized price, 50, let's say 54K, it is the average cost basis. So we're using on-chain data purely here. It is the average cost basis per BTC, per unit of coin in the supply. So realized cap divided by circulating supply. How much capital have investors put into Bitcoin divided by the total coins? Now, there's a problem with that. The realized cap, it values every coin at the price when it last moved, every coin. What did Satoshi's coins contribute to the numerator? Zero, because they were mined at a price of zero. But we then divide by them in the denominator. So there's a bit of a problem here because the long lost coins, early miners, right, and quantum, in theory, by the way, if quantum shows up and moves all of these coins, all of these models will correct, and we can talk about that. But the idea is that as Bitcoin gets bigger, there's all this unrealized profit. At 60K, it's like $130 billion of lost coins that cannot take profit. They can't act. And then in order to get to the break-even level, so for the price to get to 54K, which, by the way, we've got to in every previous bear cycle, we've gone below the realized price, you need $110 billion, $130 billion of people who are in the cycle, bought the top, but they can capitulate. They can reduce their losses by cashing out and saying, get me out of this thing. Now, the true market mean, it basically uses coin days and coin day storage, coin day creation. But basically, think about every coin in the supply has got like a health bar. How much of its all-time coin days have been created and it still holds, like Satoshi's, is 100% coin days stored. We discount that heavily. A coin that moved yesterday is it's destroyed 100% of its coin days. It's perfectly valued. So the true market mean, in my opinion, from first principles, is actually the real middle of the Bitcoin market. And it's also the cost basis for active investors. Now, the chart that I wanted to show you was,
But just to be clear, when you say the true middle of the market, you mean the average of the coin days?
It is. And statistically speaking, we spend about 50% of our time above it, 50% below it. If you do a ratio between the two, the mean is 1, the median is 1. So it is, statistically speaking. So we developed it from first principles.
Nice.
And then we looked at the stats and go, dude, this thing's like dead center. It is the mean reversion model.
Nice.
Now, this is, I think, just another demonstration for this. The gray bars at the end of the year, what is the average Bitcoin price? So every price for that day, for that year, divided by 365. The blue is what the average true market mean was for that year. They're the same thing. So this thing just runs dead through the center of it. So then when I come back to our Kagers, really, if we look at the mean and median across all of those different models, technical and on-chain, it's pretty much following where the true market mean and the spot price is. So to me, my big takeaway here is my gut feel is correct. Don't get caught up in this, right? Because it's too volatile to be useful. Doing a Kager across much bigger, much slower, much more commonsensical models is actually going to give you a better read on this stuff. And from that perspective, the power law is doing a pretty damn good job of just slicing through the middle of it and showing us that trend. So I've got to give it credit there. It really is just showing us where the general slope of all this stuff is going, which makes sense because it's derived from price. Price tends to be oscillating around it. And that's where we get into the world of mean reversion, which I know is one of your favorite projects and something I've been studying more in detail recently.
Interesting. I definitely want to ask you about the cycle itself. I don't know if you want to get to that yet, but
why don't we just do let's do a quick snapshot on mean reversion, because this is what I've been studying recently.
Good.
Let's have a look. Let's just go with the realized price. And maybe we'll look at like the 200 week, something like that. So we'll go with the technical first. So 200 week moving average. This is where I'm just trying to say, like, what are the quantiles as we move around? You're familiar with this as you look at power laws and all that sorts of stuff. What is your anchor? And this is really the question I keep asking. What is the anchor that Bitcoin oscillates around? The 200 week is a good one because it is like that bear market floor, and we may not oscillate around it as in the middle, but we always come back to it. We rally, we come back to it. It's got this floor type behavior. We keep coming away to and from it. So when we look at it in terms of like a big quantile, where are we in that grand scheme of things? You know, we got down to Q13 at 60K. And I've been trying to help people understand from my perspective, there's no prize or medallion or like champagne and podiums when you buy the absolute bottom wick. There's no prize for this.
Right.
But really you should look at this from a probability standpoint for the average hodler who's out there. I just like to simplify, if we're in the bottom 20%, it's deep value because that's the bottom fifth. When do those bottom fifths happen? The time that you're not going to look back and go, damn, I wish I hadn't bought Bitcoin back then. You know, it's these zones below the green lines. It's really favorable positions. I know the power laws in a very similar setup. So where we are at the moment, Q22, based on the 200 week, I would say that we've left deep value. Now, leaving deep value is great because it sometimes goes all the way up to Q100. However, I think we've probably got a bit more time down here. That's a different animal that we can go over. In terms of realized price, very much the same. Q16 at the bottom, and we've just left that deep value zone. So it's still not an expensive coin, but it's less expensive, less cheap than it was very recently. And the metric that I really want to pull up This is me trying to then pull a whole bunch of these indicators together, and I'll step through what this is. First things first, what happens if my anchor selection is bad? What happens if the realized price is no good? Someone doesn't believe in TA. Someone doesn't believe in the power law. Let's just take an average of 9 different models. Some of them are technical, 200 week, 200 day. Some of them are on-chain, short-term cost basis, realized price, true market mean. Some of them are 90-day VWAPs, 365-day VWAPs, just these different things, power law. Look at all of these anchors that are derived from price itself, power law, which is I would say it's a trend. It kind of doesn't change. It just is a beast. You've then got on-chain cost basis levels. These are all things the market wants to oscillate around. Let's take away our bias of worrying about which of these models is correct and just take a nice clean average of all of them. We got down to Q10. So on some of the faster models, we went down so hard and so fast to 60K that it actually just outpaced, and the slingshot was just loaded to go back in the other direction. So this builds into why I think we were well and truly due a bounce. That may not mean the bear's over, but we were well and truly due a bounce off 60K. And even within that framework, when you put all this together, we're still in extremely favorable zones. It's equivalent to the 2022 bottom, specifically after June, which is an important point. COVID, the bottom in 2018, like we're in that territory where it's like, are you going to look back and go, I shouldn't have bought that Bitcoin? I would say probably not.
And to be clear, this mean reversion index, you're not weighting it. You're just taking all the different metrics that you track and average. Yeah, interesting. And it's the median or actually the mean of all those.
I took the mean. I spent some time with Claude being like, how would you frame this up? Different angles and ways to approach it. And honestly, we just came to the best solution is just take a plain old classic mean.
No, I love that. That's great.
Yeah.
So how many metrics are
so there's 9. So to go over it, you've got power law, which I would say is trend. Coin time price, which is like a massive floor model that we developed. It's kind of like the ultimate hodlers base. So that's an on-chain model. Short-term cost basis, which is a fast on-chain cost basis. True market mean, realized price. 2 on-chain VWAP, so using on-chain transaction volume to do the VWAP, 90 days, or a fast one and a slow one, 365. And then the 200 week, 200 day. So it's a bit of a mix of technical, on-chain, VWAPs, trend. It's a bit of everything.
Yeah, I love that. That's great. And like you said, I mean, at the end of the day, when you look at these different oscillators, I mean, 20% of the time means 20% of the time. I mean, by definition,
80% of the time wants to go higher, right?
Yeah,
Where is gravity? Gravity is up.
Exactly. You are statistically in a very rare low area, and statistically it's going to go higher. So it's I take great comfort in these types of charts, especially when we're in the green zones.
Exactly. And the idea is you're not trying to pick the bottom. You're just trying to find zones where you're not going to look back and regret. And what I love about these things is you can actually just remove the emotion from it. And a lot of people ask me, it's like, well, hang on a second. Shouldn't I wait for the final wick? And it's like, well, you might, but we got to Q10 on the move down to 60K. We might go down to 55. That's about a Q5. That's where all of these previous have bottomed. Q4, right? Q5, Q4. So it might happen, but are you going to be awake when it does that? I was asleep when it happened when FTX imploded. Are you going to be not scared to like take the bite? And also there's a 95% chance that it doesn't go there.
Right.
There is also a possibility, right? You talk about this all the time. You got to be aware that anything can happen. Markets are a beast that just anything can happen. You could get a Q1, the first time we've ever gone that far away across all of these models. It absolutely can happen. Is my base case going to be the asteroids coming? Probably not. I think it's not a great way to frame your base case. And generally speaking, like if the asteroid comes, what do? Sell everything? No, you buy everything because either it doesn't matter or you go long.
That point right there is crucial. Like there's a lot. I mean, just think about how many podcasts have been talking about either one, the dollar is going to zero and gold is coming back for the gold bugs, or 2, the dollar's going to zero and Bitcoin's going into hyper Bitcoinization. These would be great events. I would love it. It'd be good to hold some gold, be good to hold some Bitcoin if you're a normie and don't understand that. But generally, we even right now are still pretty much in that fat tail of distribution of who owns Bitcoin in the world. Like it's going to take some time. And yes, the world is crazy. Yes, the world is on fire in many ways, but still, if you want to plan for your family for the next month, 6 months, year, 5 years, different goals, different time periods, but you don't plan or don't imagine that we're going to have this sort of swing for the fences moment where it's just we're hyper Bitcoinizing tomorrow. I mean, I can show you charts of GDP or money supply or whatever, where it's just there's no way that these things are changing like one might hypothesize they would change in thousands of doom and gloom podcasts. But anyway, it's a little tangent there.
Yep. No, and I think a lot of people got stuck with the wrong expectations. It's very common. Bitcoiners, we do it to ourselves, but I also found it very interesting as like a study of life, watching the silver bugs do exactly what Bitcoiners have been doing for years. You know what I mean? Like it was a painful process where you're like, oh, I just can't. I actually couldn't log into Twitter for like 2 weeks because the silver bugs were just out of control. And it was a great study of humans. I'm like, this is a mirror to why Peter Schiff hates us so much, because we've been doing this to him for 16 years. He grew silver hair waiting to do it back to us. So, it kind of gives you a bit of a framework for what it kind of looks like from the other side of the fence.
Great point. Great point. Let's keep going. I love this.
What else do we want to go through? Let's have a look here.
I mean, whenever you want to get to the cycles, I'm curious about the cycles.
Yeah, let's talk cycles. So what's your general current thinking about things?
Yeah, so I could even tie it into the last discussion we had, because I don't know if you were thinking about it or not, but it was you took a risk last time you were on here, and you might not remember, but I do remember you saying at one point, like, I probably shouldn't say this, but it kind of looks like a dip.
Yep.
Without to not be a dip. But
yeah, yep.
I didn't know either. No one knew. And but what I did see, I didn't see this from you necessarily, but I did see a lot of people in the space, which was interesting, saying they are pretty convinced the cycle's over. We're talking about the 4-year cycle here, just base case to start. Pretty sure the cycle's over. And then it's kind of like this, well, what is it then? 99% of the people don't really either understand or agree with the power law, so it's not that. And then it was sort of like, well, Bitcoin's on this permanently high plateau kind of thing. And again, to be clear, this is not, I didn't mean to mix that with York. I did not see that from you, but I'm saying I saw that a lot from a lot of people in the summer and the fall of last year. And I was always very skeptical of that, not because I had any idea that we would be down here in January, February, but I specifically said on my, like many times on my stream, I said, I will declare the cycle over if by January, February, we come back and we're well above the power curve. We're up to, 160, 170. That would be a definitive change of the 4-year cycle, which tends to end, a year and a half after the halving. And we go on this bear. Now, there's definitely some differences. It's always different every time, as you know. But to me, the cycle seems pretty much intact. And then the question will be why. And I would still say a 50% cut of your revenue, which miners have every 4 years, is a big deal. And whether you can react to that, how the market will react to that, I still think that's a way bigger deal than people give that credit for. But then the second thing is, psychology is strong, and a lot of people expected a lot, even myself included. I was looking forward to the day of counting the days, above the 90th percentile in like October, November, and it just never came. And specifically once October's that slippage started, I just didn't feel bullish at all. So again, I'm not saying I called it. I'm very weak on my calls, but this one I was pretty adamant on. Like, I'm not going to say the 4-year cycle's over until we see that it's over. Having said all that, look, if we're up above the power law by the end of this year, then that would signal something very different, because we've always been a year after, that odd year top, 2018, 2022. This would be the corollary. We've always been like at the 70, 80% drawdown. So I'm very curious, having said all that, what you think about all that, because
yes,
you're going to have a great perspective on this.
No, so let me just get a couple of charts ready here. So the first one, let's just talk about the halving from the mining perspective, because the question is like, what drives the halving?
Yeah.
And the argument has to be the miners, because that's what a lot of people will focus on, is like the miners. Now, this is one of my favorite charts. I think it just tells the story of like how big some things are and how irrelevant other things are. So what we're looking at, this is a 30-day change. Everything's 30-day change. The orange curve is the realized cap. Now, the realized cap will go up in this, and then we're talking $80 billion a month, $100 billion a month. And just notice when the realized cap goes up a lot, the price stops going up. Realized cap goes up a lot, price stops going up. You kind of get the point. Now, why does the realized cap go up? One dude buys Bitcoin for $10,000. He sells it for $100,000. Someone else had to come in with $90,000 of extra money to buy that coin. So the realized cap going up and being positive means there's a capital inflow. If someone buys the top and then sells the bottom, they buy it, let's just say 100K, sells at 60K, they've destroyed $40,000 worth of value because they bought something for 100 grand, they sold it for cheaper. So that's a capital outflow. And you can see here, we've gone through a pretty meaningful period, 30 billion of capital outflows. The realized cap itself, let me just pull that up because I think it might illustrate things. I can't wait till I've got a sidebar, by the way, that is coming. This is the realized cap. In my opinion, this is the most important metric in all of Bitcoin, full stop. You can see that it's basically the total wealth that Bitcoiners have saved in Bitcoin. If you bought a Bitcoin at 10K and you still hold it, it's valued at that $10,000 the last time it moved on chain. And by the way, there's obviously like you may have bought a coin, moved it to a new wallet. There's all that stuff that goes on. There's all that noise. I've run this against Glassnode's most advanced entity adjustment where it factors in Binance and self-spends and all that stuff. One of the beautiful things about big data sets is the averages just smooth out all the noise. This thing here doesn't deviate with the most advanced heuristics I've seen by more than 5% ever.
Wow.
Now, for me, as someone who digs or used to dig tunnels, 5%, you are dead on. Right? We don't deal in millimeters, we deal in meters. So, you know, getting it within 5% is perfectly fine. Now, so if the realized cap represents all the wealth saved in Bitcoin, it goes up a lot in the bull, and then it goes profit taking. So that's why the market stops going up, because too much profit taking saturates the demand. And then it goes down a little bit, and then it goes up a lot, and then it goes down a little bit. So the overall wealth, we see a lot more wealth creation in Bitcoin in the bull cycle than we do wealth destruction in the bear market. On net, the total wealth in the system keeps growing, and we're still up of almost $1.1 trillion. So Bitcoiners have entrusted $1.1 trillion to this funny internet money. Now, this thing here is looking at the 30-day change, because obviously going up is good, growth, capital inflow, but too much means too much profit taking. You oversaturate demand. So this orange curve is really showing you the upper bound of supply and demand. It is how much coin is changing hands, but specifically coming from the lens of the sellers, because it's the profit that's being locked in or the losses getting locked in a bear. Now, in terms of a sense of scale, the green curve down the bottom here, that's the ETFs, total value flowing into the ETFs. Now, in a bull and even in a bear, it's about 20% of the overall float, right, of what's going on in terms of demand. So whenever someone says that the ETFs have captured Bitcoin, I look at this chart and I'm like, well, you're kind of missing the other 80% of that description.
And it's only been 2 years anyway.
Then we've got Saylor, who everyone else says Saylor's the only one supporting the market. I'm like, in the most bullish of times, he was like 15% of the demand. Now he's like, even though he's buying a lot, he's just very small. He is trying to absorb this. This is why the market isn't going up, because this is Saylor's buying. He's trying to absorb this much sell side in terms of capitulation.
How did you calculate that? MSTR demand? MSTR demand?
It's literally 30-day, well, for his case, most of the time it's buying, 30-day change in his balance, USD terms.
Got it.
Now, let's see this tiny little black dashed line here. That's the issuance every 30 days. So relative to everything else, the issuance is this tiny little black line here. This is what it's like. The hodlers in the bull sell way more in profit, and the top buyers sell way more at bottom. So
that's a good point.
Yes, the halving is a thing, but you know, there's another metric I can look at, which is, I'm going to try and remember, which I haven't looked at this for a little while. It's going to be this one. This is trade volume, right? I'm pretty sure I have. Oh no, no, it is. It's tiny little. See this little black line down the bottom here? Can you see it? It's like, looks like the zero line. If we zoom in far enough, we're getting there. It is. There it is. That's the miners, right? Relative to the size of everything else. So from the mining perspective, I don't think they're a big component. I think they haven't been for a long time. Whether you want to do volume or you want to do it in terms of just overall supply and demand, I think they're very small. So Personally, I'm going to put the miners aside as a secondary, tertiary thing.
Yeah, let's come back to that at one point. But I see you have OI for IBIT. Can you put that on?
Yes. Now, this is going to be a little bit skewed because obviously IBIT options, you're going to have the expirations. So there's going to be some element there. But for the most part, gives you a bit of a sense of scale. And here's another good insight. How much of the ETF outflows are associated with CME open interest, basis trade? A lot of it. Most of the outflows have been associated with a basis trade, particularly as we came into December. It's window dressing by hedge funds. So a lot of the ETF outflows have actually been like basis, in my opinion, a basis trade rather than Bitcoin sucks, get me out of this thing.
Yeah, that's a good point. Okay.
So that's all building into like my core thesis at the moment is adopting the 4-year cycle. There's two elements we can go down here. I'm of the view that we want to find the market mechanics that form a bottom. I don't really care if it happens in October. What I care about is when do we actually have true bottom formation behavior, and then I'll check the calendar. So that's my preferred approach. I ran a study, which I did a piece called Time Pain. This is my spreadsheet from it. The short story was I looked at like 8 different things that could help. I know when the bear market bottomed in every single bear cycle in the past. And then I go back and look at when did something happen that's like a good starting reference point. So example, cycle high. What was the time between cycle high and the bottom? That's one approach. I can also say, when did we break below the 200-day moving average or come up and retest it? That's the mechanic that says the bear market has started. When did we break below the short-term cost basis? What else did I do? I looked at the 50-week and the 200-week moving average. What was the time that we lost the 50-week for the first time? When did we break below the true market mean? When did percent supply and profit go below its one standard deviation level? All these different metrics, on-chain, technical, show me the market structure break and how long it took to get to the cycle bottom. And like we did with the mean reversion index, I said, let's imagine we know when we broke below the 200-day this cycle. We know when we lost the 50-day. We know when we retested the short-term cost basis from the underside. We know when that mechanic happened. If we project forward what was the average time since that event to the bottom, we can basically estimate how many days we have left in the bull cycle. Now, in the bear cycle. Now, when you take the average of everything, that gets you into July, middle of the year. So a lot of people are looking in October, and the only model that I looked at that said it's going to go out to October was we topped in October. So from my perspective, it's one of those things where, sure, it might follow the 4-year cycle. It might. But if you like, you're hoping that it just is exactly 365 days since the top. That's the only mechanic that tells you that's where it's going to be. So I guess I'm going to call it advice to people. Don't anchor yourself to the 4-year cycle and say it must happen. Yeah. It might happen, but if you assume that it must happen in October, you are going to miss what I think is the most interesting thing happening in the Bitcoin space right now, which is this chunk of coins. This is all the wealth. This is the realized cap plotted out as a long-term holders in blue, short-term holders in red. So this is showing you versus price where the wealth has been accumulated. Now, a study I'm deep into at the moment, 2018 and 2022. How much wealth was like that plug at the bottom of the bear? Enough coin changed hands from dumb money to smart money to form the base. It was about 25%. It was like 24 and 25 and a half in both of those two previous bears. So we only have 2 examples there, but that was enough supply changing hands to actually stop the bear from going any lower. There was enough demand in that zone. When we sold off in February, before we even came down into this price range at 60K, we had 10% of people from 2024 who were still holding in this price range. This has now grown to 20%. So we want to get to 25. That would be previous bear market bottoming stuff. Mm-hmm. In our current price range, we've gone from 10 to 20 over the course of February to the 18th of March. It's the fastest transfer of wealth from top buyers to bottom buyers, as far as I'm aware, that we've ever seen. So my thesis, my like mental thesis here, what if 2025, which was such a painfully boring market for Bitcoin, What if there was a bunch of pent up frustration? And more importantly, Bitcoin was in a bear market versus literally everything else.
Hmm.
Nvidia, gold, silver,
Yeah.
you name it. So Bitcoin was actually in a bear market through 2025, except versus the dollar. What if all that pent up energy got released super hard, super quick in November at 80K and then again in February at 60K? And suddenly, like that, the bear market, the duration component, what if we've served some of our sentence before we even sold off and we
Yeah.
built up all the anger and it got released really hard? And now we're going through the process of refining equilibrium, and that equilibrium may be being found much faster than in previous bears and at a much higher level than people would expect. So that's my current like working thesis. If it doesn't occur in October, I would say this is probably why. So that's my current like thinking. I'll pause there because there's a lot to absorb.
Nope. I completely agree, completely understand. And I do think there's a lot riding specifically on this 4-year cycle idea. I completely agree. You should not anchor your thesis to that at all. But or I should say, and the observation that you made that we could actually have served a lot of that sentence already, I think is very, 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 even likely, because we're so close to these values that are so low. It's just a question of, and this is precisely, I think, the study to do it. It's precisely, how close we need to get to be to that 25%. And just to be clear, the 25% of the total, as you said, what exactly percentage? It's a short term versus
It's
long term.
percentage of the realized cap. So it's percentage of this beast. So what percentage of the wealth invested in Bitcoin price every coin when it last moved? And then this is basically just doing a cumulative distribution from 0 to 100%. Where is the wealth, right? Overall, where is it? And right now we've got, there's 31%. So by the way, this has gone up by 1.5% overnight.
Hmm.
And it went up by another 0.8 the day before. We're seeing a tremendous amount. It's about $600 million a day of capitulation pressure every day. And it's been like that for weeks and weeks and weeks. So we're seeing 31% at the top end, and I go down to 53 because this is kind of the bottom of the plug, 10.8. So, and that's another thing. The amount of coins we're seeing, here's another fun insight. You would expect, so obviously the world's in a pickle, right? We've got wars in Iran, oil spikes. I would say if you're in Bitcoin and you're holding profitable coins, if you were scared, you'd be saying, I need to just cash out here and I'll buy back lower. Over the last 30 days, these tiny little red bars here are all the coins that have spent from lower prices. None. Nothing.
Right.
Everyone is capitulating from the bear flag that we had 80K to 98K at the start of the year, and then top buyers. So we're now in a realm where the only supply that's being sold really, it's not coming from cheaper prices. It is coming from top buyers, which is what a bear market is. It's top buyers selling to these folks.
So going back, what we know now, going back to the end of last year, and like you said, there's a lot of differences last year, and we had a lot more institutional involvement last year, say compared to 2021. Although we did have some institutional in 2021, but how would you, what would you say to sum it up? Like, would kind of cause this? There's a lot of differences, right? Because the
Mhm.
2022, or sorry, 2025, we didn't even finish green, did we? Or
No,
did
it's down 6% or something, six
right?
or
So
eight.
that is even a difference. That's true. Just even the 4 years, because all the 4-year cycles, they speared crazy
It was green,
high.
green, green, red. We had green, green, red.
Right.
Or green, green, orange, I think is a better description.
Yeah. Yeah. True. True. So but that's iffy. But still, we're going to the red zone, which has always happened after the prior year's top of that odd year every 4 years. Is your analysis then that at the end of the day, it's a question of capitulation of short-term and long-term hodlers? Is that the strongest analysis, would you say,
More or less,
of
more
where
or
we
less.
are?
So there's kind of two elements to it. One, let's just get rid of all that stuff, and let me just see if these. Yes, they have. Uh, no, that's fine. Okay, so the metric that I wanted was this one here. So this is one of these cool charts I've recently got access to. By the way, I'm just going to give a shout out. I've been pulling all my on-chain data from this bloke who built this thing called Bitcoin Research Kit. You can literally plug this thing into your node and get every on-chain metric you could possibly ask for. It's absolutely insane. Researchbitcoin.net as well. He's got his own API set up. So if you're interested in just like exploring data, Bitcoin Research Kit and researchbitcoin.net, phenomenal. You just have absolutely everything. This is
100%
one of the examples.
at a
This
fraction
is
of the
looking
cost from say the other services. And I
well,
mean, most of it's
totally,
free anyway. It's amazing.
totally.
Great work.
So this is realized loss. So realized loss specifically is a coin bought at a higher price, and it's measuring the delta, just the delta, not the cost basis as well. The delta of where it was purchased, where it was destroyed, or it was spent. And it's broken down by years. So 2026 and 2025 are the pinks that you can see, obviously dominating. That's very normal. The people who capitulate in the bear are the ones who bought the bull, right? Makes sense, fairly obvious. But what I like about this is it just gives everything in terms of perspective. Here's where I think we've got our pent up sideways grind and just frustration, where Bitcoin is in a bear, a hidden bear versus everything else. Everyone's got parabola envy. November, we had 2 billion. This is, by the way, on a 7-day EMA. So the raw number is much larger, but I think
Yep.
daily data is just noisy.
Yep.
2 billion and then another 2 billion at the February level. Now, I can bolster this. You may have had the same. My inbox was lit up like a Christmas tree. I had podcast requests and I had people who are long-term hodlers saying, oh shit, what's going on? Like I just got message after message saying something is wrong. And I was looking at my mean reversion models being like, guys, we're in deep value. That's what's going on. Like this is awesome. But the scale of these things. Now, this is in dollar terms. So to be fair, you could argue this should be bigger because the price is bigger than it was back here in 2022. But also, if you put these two back to back, I'm starting to look at this capitulation, and then this bear flag was fairly short. The second capitulation, I'm actually grouping these together. I think that they're like one big, oh my word, get me out of this thing event. Whereas 2022, it took people a long time to kind of accept that it was a bear, and then they finally worked it out when 3 arrows blew up. And then FTX was like an overshot. We'd kind of priced everything over the course of the 6 months. It took people time to adjust and work it out. I think people kind of worked out it was a bear market straight away. Certainly on that February sell-off, we hit the acceptance phase of the bear. Lots of frustration, 2 back-to-back capitulations. In my opinion, these are of a scale that is equivalent to this June 2022 event. And yes, we may get an FTX thing that comes some point in the future. Possible. Most of the time pain ends with another capitulation. But what I don't think that capitulation will be, my current base case, is I don't think it's going to be a 126 to an 80 or a 96 to a 60. I think it'll probably be like a 78 or an 80 to a 55. You know what I mean? Like it'll be within the same zone. And the delta will be time, not price. It'll be time. And the time pain is what's going to shake a lot of people out, I think.
And to be clear, I think you said it very well. Most time pain ends in another capitulation. You can see that quite clearly from June of 2022 to that December, November, December crash.
2015 was the same too. This one here. Yep. Brutal. 2018 was a funny one because we didn't really get a a time pain capitulation. And 2018 was interesting. I used this second, like we rallied off the bottom and then we came back down and in February. This is actually the level that I pegged for my time pain study where I was trying to work out how long until the bear market's over. There's an argument to say that 2018 was a bear, 2019 was a relief rally, and 2019 was the continuation of that bear market. And then this whole structure is what it took to work off a 100x parabola. I think that's a fair read or assessment to it. So then if you think about it from that perspective, is the 4-year cycle this peak to this peak? Is it to this peak? Personally, I think this is the actual top of the market. And I also consider this to be a mini bull and a mini bear. So even within the 4-year cycle, there's a lot of stuff going on. Like this was, I know it was Plus Token that drove this thing, but there's a bunch of elements that don't fit the model anyway, even if you take a strict view.
Yeah, no, totally agree. Totally agree. I want to go back to, I mean, keep going if you want to show anything else here. I did want to go back to that flow chart, both the realized flows and the the IBIT and
So
the
here, yep.
yeah. So this probably at the end of the day is I would agree. When you're talking about flows, it's just one of the most influential things when you sort of can set bottoms and react to tops. Want to get your thought on the miners though, because you mentioned how small they are as far as Bitcoin flows in.
Hmm.
I definitely agree, and I definitely think that it's another reason why the stock to flow model is flawed because
Totally.
there's a few different reasons there. Some are mathematical, but as well it's kind of arbitrary from that
It also
perspective.
goes to infinity, which is a problem.
Right. Exactly. That's why the power law is nice. Uh, but I am wondering how that plays into the sort of the time dilation because a lot of
Hmm.
people were theorizing even back in 2018 as we were going down, maybe the next cycle up would have been longer. It turned out to be about the same, 4 years. So we'll see. But like you said, even within it wasn't really 4 years. It was actually even quicker than 4 years if we go that it was March 2021 that was the real top. So there's a lot
Hmm.
of, just like you said, there's always question marks here. But the power law says something interesting. I'm just wondering if it triggers anything that you might think of with your charts. But so basically, what the power, if you look at an exponential trend, which is just a straight line on log linear, which is all stocks move in exponential, gold, silver moves in exponential, a lot, all financial assets. You can put it in log linear. You can take the natural log of all the values, whatever. But at the end of the day, the volatility or the deviation around the trend is equal no matter where you are in the chart, right? So you could go back to the
Hmm.
1950s for a stock, you could be now, and that's why the exponential works for those assets. It's the deviation is always comparable. You don't need to do too much adjustment. You do for the power law because the power law by definition is more is quicker and it's more volatile in the earlier periods.
Yes.
So I'm wondering if you have any other charts that might be able to account for that decrease in volatility or decrease in deviation. Because I just throw another number out. The thing that was weird to me is the revenue in dollar terms for miners themselves over the course of a year wasn't even as high this period as it was in 2021. In 2021, it was I don't have my charts up, but it's something like 18 billion over the course of a year. That's all the
Mm.
new coins, all the fees rolled at whatever price it was.
That's about right.
Yeah, 18 billion. And this year or this last year, it was like something 17 billion. I don't think it even hit the top. Might have hit the top, but it was, let's just say, the point is that number itself, like many other things in Bitcoin, was multiples higher, right, as you went further. But the growth of that multiple was even flat. It even went to the point where it's flat. It was actually kind of scared me from a general perspective. I was like, wow, this is, even if we decrease the volatility or decrease the deviation, we're still multiples higher. Here we're actually on raw terms, the same number. So that's kind of weird. My first point. And by all means, that shows that the miners are less,
Yes.
less,
On a relative
less
scale, if they're
right,
equal between cycles, then they're less relevant.
less relevant. Yeah, so I agree with you there. But yeah, I'm just wondering, are there any other charts that jogs something where you say, okay, how do we measure the fact that okay, Bitcoin's more volatile, does more stuff in the past, but now as it grows, the networks grows, becomes more established, it comes sort of chilled out, and we get into something that is, just less extreme. Do you have anything that kind of adjusts for
Um,
that or counts for that?
Kind of. I'm still thinking. So I want to go down. There's some rabbit holes there, but some that you've jogged my memory just on the mining side of the equation. And also, you mentioned something about the early years, how it was more volatile. Let me go through
Right.
two ideas here. So you were mentioning the alt. I think you were looking at like the annual total mining fees and everything.
Yeah.
Then we've got the thermo cap, which is if you roll that up as like a market cap, how much of the mine has been paid. And I've just converted this to a price. So this bottom line here is the thermo price, but basically the all-time mining rewards divided by the supply. Now, um, if you think about Bitcoin as a commodity, it should develop a monetary premium over and above its production cost, right? So over the long arc of time. So back in the 2011 bear, this is one of the few metrics I could be willing to go back this early. We pulled back to the production line. In the next bear market, we had a 2 times multiplier. on the thermo cap at the bottom. So the bottomed at 2 times the cost of production. As we came into 2018, we're hovering up around the 8x, 7x type level. These are all 2x multiples. Similar for 2022. And you've got to remember, this is another fundamental, like I find you've got to take the data and then overlay your own experience about what was going on.
Mm-hmm.
We had a total and complete evisceration of the entire lending market, as well as the world's largest fraud and the fastest rate hikes in history. 2022 was kind of a unique beast. So it actually took us back down to the 8x line in terms of that monetary premium. And here we're bottoming at the 16x. So it's funny that we're kind of like, we're just not going back down to those lower levels of where the production level is. So again, here's the miners. They're getting increasingly small relative to where Bitcoin's monetary premium is baked into it. And the other one, now I'm going to try and refresh my memory because it's been a while since I wrote Coin Time Economics, but one of the strange, very esoteric observations, this is the inflation rate for Bitcoin, right? The nominal issuance rate. And people are familiar with this. You have your halving, right? It's coming out 10% a year, 5% a year, right? And here we are down near gold. And by the way, ignore this spike. This is literally because it's an incomplete day. But if we bring in what we call the coin time adjusted inflation rate, this helps explain why it was so explosively volatile in the early years. Now, what happened with Satoshi? Think about all those early 50 Bitcoin mining rewards. What happened to most of them? They're still stuck on the thumb drive somewhere in the wilderness, right? Probably never to be moved again.
Yeah.
So a ton of the coins that were mined did not transact. Now, what happens if a gold miner has no influence in terms of costs? They mine gold and they just stick it in a vault. Did that gold ever create inflation?
Right.
No, it didn't, because it got stuck in the vault.
Yep.
So coin time adjustment basically says, well, how much of the coins that were mined or are being issued were actually circulating? So in the early years, the coin time adjusted inflation rate, meaning coins that aren't moving are discounted, the free float was not this, it was significantly less. So you got explosive growth because there were just no coins to buy. The few people that did want to buy it had to buy it off the few people who were willing to spend and transact them.
Yeah, that's a good chart.
Yeah, it's cool, right? So in the early years, we just didn't have that behavior. Now, something happened in 2017, in and around August specifically. The coin time adjusted inflation rate was lower. It kind of matched up through this period, and then it broke above, and it has remained above ever since. And this is getting back to this chart here. It's not miners that create the inflation, so to speak. It's existing holders selling for a profit, selling for a loss. It's the free float of coins that continue to change hands. And it's why everyone who goes, it's just the miners, bro. It's like, well, it's certainly not the miners, bro.
Yeah.
And the thing that I find really interesting here in August 2017, what happened in August 2017? A bunch of old coins finally had an incentive to spend to capture the Bitcoin Cash dividend. They brought a bunch of old coins. They brought a bunch of old coins back to life. And all of this actually distills down to liveliness, which is really the basis for all of coin time economics. And I'm going to zoom in. I need to actually fix this up in terms of axes. So liveliness is one of the more interesting Bitcoin metrics. It basically models out all-time coin day creation. So every coin in the supply, it's basically a cumulative sum of circulating supply. Every coin in the supply accumulates 1 coin day per day. So liveliness shows us all time how much of those coins created have been destroyed. So it's basically how alive is the network in terms of its activity rate. Now you can see in 2017 was a gangbusters year for old coins coming back to life. Coin day destruction out the wazoo. And you can see here coming into July and August, massive spike, just a totally different regime shift. And then we've been oscillating ever since. Boom, where people sell into profit. Bust, where people start to accumulate. Boom, we actually broke to a new high this cycle. We had so many old coins come back to life this cycle specifically.
Yeah.
That liveliness actually it broke out of its 2017 all the way through to 24. It broke out of that range because so much coin day destruction occurred. So, a few different points there, but I think it helps illustrate that the miners just aren't as big as the hodlers. The free float that's owned by people, not miners, is actually a much bigger influence. And so much so that this cycle, we just saw a ton of Coinday destruction from very old coins that finally took profit. I don't mind the Jordi Visser IPO moment. I think that's a good, like, just simple model to think about it from that perspective. It's not perfect, but I think it's a good, just like, that happened, right? It may not be the only thing that happened, but that happened.
Yeah. Yeah. All good points. I think that helps clarify it a lot, because it would be interesting to try to, meld all that together into some sort of a, I don't know, a
This is literally
discount.
what I try to do with the newsletter. It's an ongoing beast.
Yeah.
This is my job.
Yep. Yep. I know it is. So you do a great job at it. It's like trying to find this sort of discount factor, which can take into account how a network grows, take into account what a power curve does, but also manage sort of those expectations. Because it's just by definition, like I do this often where I have like the different bands which you reference, like some are, I do it with a quantiles, but some I just do it on the multiple over or under the trend. And the multiple over under the trend, again, as I was saying earlier, that really only works in exponential. Like that would fit an exponential function. But the power curve by definition becomes less volatile, becomes closer to the trend over time. So it's a question of maybe using some other metrics to discount away some of that. It's like if you go back to the thermocap chart, we're never getting back to the lower levels what those miners
Totally
were doing.
I mean,
It's a similar idea. Yeah, it's a similar idea.
There'll be bears calling for it. That's when you know the bottom's really in, when people are calling for the 4K level.
Yeah, precisely. So it's just kind of, like you said, I'm just kind of throwing some ideas out there as well. But I like the you have such a plethora of good on-chain data here to compare with. So I think it's
if you just think about that perspective, like just eyeballing it, if this is the ratio between price and the thermo price, so cost of production, right? Boom, and then just like silver grade nuked following it, right? Boom, it's nuked, but not quite as bad, nuked. But you can see here we've just maintained, there's more body, right? If you do an area under the curve, there's a ton more area under the curve since FTX. Since we got that, like, just there was a very clear shift. I'm not going to be able to actually, hang on, maybe I can. Where would that metric be? There's a metric that for the short-term MVR, but you can do it for any metric. Very, very different change in behavior. This might actually get to your previous point. Let me see if I can dig it up. Where is it? Basically, I model out the, here it is, found it. I'm hoping that I haven't busted this thing. But it basically maps out different oscillators by cycle. I think this is it. I would say my axes are busted, but we can fix that. Here we are. So this is short-term holder MVRV. So the basically the ratio between price and the cost base of the people bought in the last 5 months. That's particularly useful because it's tracking the hot ball of money for the last 5 months. You don't actually need to adjust it between cycles because there's always the same ball of money that's following price. I've been looking at there being 2 major regime shifts in the Bitcoin behavior. The first one was the 2017 top. This to me is like very much an organic, we've just got a trading view chart. Coinbase has just gone live, retail driven adoption cycle in the red. Then we had 2017 top, 100x parabola. It took 2.5 years to work that off. And you can see that through the orange zone, which is the 2017 top, all the way through to FTX, straight down, straight up, straight down, straight up, high amplitude, perps, volatility, retail, Bitcoin's dead, it might come back, right? And also still very institutional, retail with some hedge funds, right? Crypto native funds and the like. Plus, I would also say that there was more of a narrative of crypto, not Bitcoin back then. So people aren't quite sure which thing to buy. Now I think it's increasingly aware that Bitcoin's the signal. Since FTX, it's just had this different resonance, right? It's trading in a very, very different way to what we've seen in previous cycles, lower amplitude, right? You can clearly see that the amplitude through this phase is lower than we've seen, certainly in here. It just has a different pattern. So I think the investor base changed. I also think there's it's hard to measure, but I don't think as many people think Bitcoin's going to die anymore, right? If you go back to 2018, 2019, there's a good chance that Bitcoin could have died. A lot of people truly believed it, or it would be superseded. I don't think people believe that anymore. Now they're just saying, well, it'll bottom eventually and then it'll go up again. I just don't want to buy until it bottoms. I think we've changed that psychology of how people behave. And I think it's a lot more hodlers who are going to hodl. I don't know if I still have that bar chart up. I don't think I do, but you may recall there's a big cluster of blue coins. Now, the long-term, short-term threshold right now is just past the all-time high. So every short-term holder today is a bear market buyer. Every long-term holder is a pre-bear market or pre-top. There's a bunch of folks up at the top who are still hodling. And I'm pretty sure they're aware we're down 50% from the highs. I don't think they're surprised that we're in a bear market. They don't care. Like I think my highest coins, like 105, 100K, I'm not selling. I'm just going to sit tight. And I think there's a lot more people up there doing the same thing.
Do you have any, we're getting close to the hour, so I want to be sensitive to your time. We're at the hour. Do you have any more on the short term, long term, maybe UTXOs or some other chart that could kind of illustrate that? Because I think that is probably some
Yeah.
of the purest signal at the moment.
Oh, I love long-term, short-term. And, I often have folks say, there's got to be more complex. There's got to be other cohorts. And there are. But once you add more degrees of freedom, you actually create more complexity. And for me, sometimes you can solve the problem without needing that much complexity.
Yep.
Let's have a look at, I think this one will be useful. This one here. So this is the chart I was talking about just before. 20,000. So these are the long-term holds. Really, this chart tells the story of three people. People who bought the top that are increasing. By the time we get to April, so end of this month, everyone above 95K will be a long-term holder. So these folks kind of know it's a bear and they've chosen to just sit on their hands.
Mm-hmm.
These folks are the ones who bought the bear flag between November and the start of February. They are, in my opinion, going to be the biggest resistance because the price are going to rally and they're going to want to get their money back. So they're going to sell into that rally. These are, in my opinion, where we're going to get the most resistance from. And all the sellers from here, 50% of the selling is coming from here, about 25 from here. It's a bit more than 50 here. They're all depositing down to these short-term holders. Now, these short-term holders are a special breed because if you think about generally speaking, you think of long-term holders as hodlers and short-term holders as speculators. Well, there's one moment in every cycle where that is not true. At the very, very bottom, whenever we get to the bottom, long-term holders, a ton of these guys are going to sell. They don't know they're going to sell, but they're white knuckling it right now and they are going to capitulate at the bottom. So we get long-term holder losses get locked in. We also get, if you think about who these short-term holders are, it's me. You know what I mean? Like I'm going to be buying that bottom because I've been around Bitcoin long enough that I know what a discount looks like. There is a point at the bottom of a bear where these red bars are actually the most hardcore people buying an asset down 50% when the Boris Johnson's telling you it's a Ponzi scheme. Like there's 10,000 reasons why Bitcoin's going to zero. And these folks are stepping in anyway at low prices. So they're actually the most hardcore.
Percentage-wise, what is that number?
Let me have a look here. So right now, 25% of the short-term holders are down in here, or the short-term holder wealth. So let's just say 110 billion worth of short-term holder coins right now.
Mm-hmm.
Percent of long-term. We can do the math here, but 18%, 35. No, it's too hard to do on the back of the napkin. But yeah, so we've got something on the tune of 25%. Well, sorry, 20% of the realized caps are 200 billion. $200 billion is down here.
Yeah,
kind of remarkable.
Yeah.
And the last one that we can probably close on is understanding long-term holders in loss, short-term holders in loss. This is their supply profile. Actually, sorry, I should throw this in as well. Because at the end of the day, what we're looking for is enough coins to get deposited down here to form a bottom. Percent supply and profit. If you notice at every bottom, we get this explosive move. Price at FTX was grinding sideways, and now look at this thing. It's just ripping to the upside. Price only has to go 1 cent above a cost basis for that coin to be in profit. Mm-hmm. So when you see the price going sideways, look how quickly this thing moves, right? We're up at 63% from down at 40. So 20% of the supply go into profit, and all we did was get to the top of the trading range.
Yep.
It's telling you about the density of coins that bought the bottom. Now, I don't think this is it. I don't think, because we're kind of at the top end of the trading range, I don't think this is enough. I'd love it to be up here.
I agree
It's
with you.
nice, but it's not enough.
Yeah.
But just imagine winding the clock forward till middle of the year. People just get so sick of this thing. We trade back down to 62 and they go, I'm just done. It's just the perfect recipe to get that final 5%. And the Bears, by the way, this is true in every previous cycle. I circled this in one of my recent reports. Back in 2022, the Bears were looking at this little thing down here with 5% of all the wealth and being like, that's the target. I don't know how many people I've seen calling for 40 and 30K. Could happen. Would be a Q1 event. But the Bears were also calling for these tiny little tails in all of the previous Bears, right? That was 1K. It was 10K in 2022. They're always calling for the market to go down here. The same way when we think about that monetary premium chart, we just don't belong down at those lower levels because we're just bigger than that now. That's what this is. This is basically saying these people are so irrelevant to the wealth that's invested in Bitcoin. This is where the action is. This is where Bitcoin lives now. So that
It's
is
like
where
it's
people
like
invest their
Doomberg
cash.
saying that $5,000 Bitcoin is fair value when it was 20,000 back.
Yeah, and my answer to any of those questions is based on what I'd love to. And Doomberg in particular, I'm a big Doomberg fan because I think he's a great thinker. His Bitcoin space is the one thing I'm like, dude, let me sit you down for 20 minutes because you're missing a ton.
Yeah. Yeah. Agreed. Peter Zion too.
Yeah. Good luck with that.
$17,000 overvalued when it was 16,000 on Joe Rogan.
Yep. Yeah. Oh, man, it was a bottom call, right? And that's what we're looking for. All we need is the IMF or the ECB to release a paper about the death spiral, and we're good to go.
100%. 100%. Listen, James, this has been great, man. I love it. I would love to do it more, maybe once a quarter. We might be on a tradition. We used to say back in the fraternity, it only took 2 years to do a tradition, maybe 2 quarters, and we're off. So
sounds about right.
Off to the races. Listen,
Happy
man.
days.
I think most people know who you are, but can tell them where to go.
Yes, checkonchain.com. We've got our newsletter, which again is my working project to try and work all this stuff out, and then obviously all the charts are free. Please forgive the logo. Truth be told, I'm probably not going to fix it because we're so close to the production website. It's just gonna live on.
I love it. Well, congrats. I'm in the same revamp mode, so I understand.
But, it's a big job, but it's good because I'm finally cleaning up code that's been there for coming up 6 years. It's a long time.
Nice. Well, good on you. Congrats.
Good on you, mate. Thank you.
Best of luck and talk soon. See
ya.
ya.
Good on you. Cheers.
All right.